What's up, everybody? Jonathan Rose, owner, Masters in Trading. Thanks for coming to my channel. Thanks for checking out this video. Today's video is going to be about oil and gold and how we can look at them using a relative value approach. For those new to this channel, you're going to find lots of education on stock options and futures. There's a reoccurring theme though, because everything that we look at is using relative value analysis. Pair trading, it's called. Some people call it delta neutral trading, even though it's not really delta neutral trading. Relative value analysis is a way of analyzing an asset by using another asset. In my personal opinion, everything that we do in life uses relative value analysis. When you buy a house, when you buy a car, when you buy your phone, you compare it to other like assets. So, in this example, in today's video, we're going to analyze gold and oil, two strong influencers in the global economy, right? They're definitely pushing and pulling at one another. Today, we have gold up a ton. Gold's up 12, 13 bucks. It's made a strong move lately from 12.75 up to 13.23, just using the gold futures. Down here, I'm just doing a very, very basic gold divided by oil, gold relative to oil. And we can go back looking at the data going back to 2016. Here's what it looks like, gold relative to oil. Lately, as you can see here, the relationship has moved from about 19 up to 25. Why is it doing that? Well, gold is rallying. At the same time, oil is selling off. So let's look at gold and oil next to one another. Okay, so all I did here, guys, is I just put our gold chart. Here's gold relative to silver, and here's oil. What I want you to notice is right now, the relative value relationship is strengthening. And it's strengthening because we have gold strengthening, and at the same time, we have oil weakening, right? There's a disconnect between those two. Well, let's look historically. It looked like at the end of 2018, gold got very expensive relative to oil, right? And that's why it's so important to watch what you say, because gold didn't get expensive. That's not what it did. But what it did is it got very expensive relative to oil going back to 2016, 2015. If you went back further, you'll notice historically it's extremely expensive. But nevertheless, if we go back to this time period when gold gets very expensive relative to oil, that would be right here and right here. So going back to this time frame, just using this basic relative value analysis that allows you to follow the entire gold complex, the entire oil complex, really, you can see that you would have benefited incredibly by selling gold or gold assets, right? Gold ETFs, gold miners, anything that's heavily influenced off the price of gold, while simultaneously noticing that oil was historically inexpensive. So you can buy oil, sell gold. Gold, you would have lost money, sure, but look at the return that you would have got on the oil contract. And that's why it's sold off. Now, we're possibly seeing the same thing where oil is somewhat free falling. At the same time, gold is starting to rally. It just started. We only have a 2-day rally in gold, but I think that what we're going to see is if gold continues to rally, and let's say gold gets up to 1380, 1400, while oil still stays upward, still stays downtrending, that's when this relative value relationship is going to get over 30. And that, my friends, is a screaming good trade opportunity. So let's sit and wait. What's always going to be important is making sure when that does happen, you're in the right trade. And the right trade is going to be long oil, short gold. What you don't want to do is all of a sudden be selling oil assets down here when this relationship is historically expensive. It's just not smart. It's not a good do. And again, that's why whenever I'm teaching, I'm always going to tell my members, education mitigates risk. And this is one basic example of how you can look at the market using relative value analysis. Check it out. Any questions, leave them in the comments below. I think you'll see it will definitely give you some consistency to your trading. Thanks. My name is Jonathan Rose, owner, Masters in Trading.